Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of thinktrading.com, and I'm here with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. Hi Manu, how are you?
Hey Paul, yeah, not too bad. How are you?
Yeah, good, thanks. Obviously a very volatile day and quite a volatile week. What's your thoughts on the markets here?
Yeah, so look, I think I like to kind of look at I like to look at maybe the second order effects of what's happening. So if I look at the mainstream media, the narrative is everyone's panicking that the Russians are going to roll tanks into Paris, which is clearly never going to happen in a million years. I think you've got to maybe have a little bit of context of what's happening right now. The regions that have been, in inverted commas, invaded are regions that are ethnically Russian anyway. So if you think about the geography of Ukraine should never have been one country anyway in the first place. Everything's basically east of Kiev is ethnically Russian, and everything west of Kiev is ethnically Ukrainian. So if you look at the rhetoric from the Russian media, what seems to be the rationale for why this is happening is the protection of those that are protecting the sovereignty of those that are ethnically Russian. That's why Putin has done what he's decided to do. But I think this is going to be temporary. I can imagine this is probably going to be over in the next couple of days, and I think this is going to end up being one big whole nothing burger in terms of what the impact is. The economic consequences of this are actually quite worrying. So I believe it was yesterday evening, Russia banned the export of ammonium nitrate, which obviously is a constituent of fertilizer. Well, Russia manufactures 65% of the world's supply of ammonium nitrate. What did that do to the price of wheat futures? They were pretty bid yesterday, funnily enough. So, my concern on this is less an actual war. My concern on this is the impact this has on commodities, the impact this has on ags, and the impact this has on food price inflation. That's very worrying, and that I think is the story that people are going to begin to speak about over the course of the next few months. Right now, everyone's panicking for no reason, and I guess they've just moved from a deadly virus to a deadly war. In terms of tearing the old notch of fear up to 11, as it were, on the dial. I think also in terms of a bit more context of the region, let's not forget that in '91, when the Soviet Union essentially gave up sovereignty on huge swathes of geography, one of the conditions they made was to say, look, we will do this, and there will be no bloodshed, there will be nothing. This will happen over the course of the next few months, as long as NATO does not expand militarily. And what's the first thing NATO then did under who was it? I guess the Clinton administration back in those days. They expanded into Poland, the first thing. So I think. I mean, look. Don't get me wrong. I'm not saying that Putin is necessarily the good guy. I'm not saying he's clearly. He's clearly got some major issues, but I think the guy's a smart guy. He's not an idiot. He's I guess taken a calculated risk with what he's doing. I think the response of the West has been a little bit over the top. I think it's been somewhat heavy-handed. What's also interesting is just from a crypto perspective, the ambiguous status of crypto in Russia was remedied earlier this week. So they essentially passed a bill that clarified that digital assets, or crypto specifically, were an investment asset. They were not a means of payment. So you can't buy a cheeseburger, but I'm not sure who is buying cheeseburgers with Bitcoin. But you can buy and sell and trade it, which is interesting. And now, funnily enough, last time I checked, in terms of the hash rate, Russia is number 3 in terms of crypto mining. Out of nowhere. They weren't even in the top 10 12 months ago. Now they're number 3. So I think there's a lot going on behind the scenes here that are going to make potentially Russia a bit of a crypto powerhouse going forward, which I think is quite interesting. And if you look at the real move in the sell-off, really, I think happened during the course of today. And I think so we saw the equity move yesterday. We saw the crypto move, the majority of it today. And I think the reason is because of what we've heard. So apparently there's been a cyber attack on the Ukrainian government by Russian hackers, but isn't everything. And then the Pentagram, or the Pentagon, whatever they're called, issued a statement saying there was an imminent threat, cyber attack, coming your way soon. And then the crypto market went nuts. So I suspect that's related to this. Again, it looks as though it's going to hold 33K. I don't know. I'm not sure. I hope it does. And if it does, that's great news. Again, for a bit of a wash and rinse and a bit of a consolidation before it bounces higher. But in terms of where this market is going, medium to long term, it is definitely going high. And I just came back from the States, and I was speaking at a conference, and there was, I think, 470 funds at this conference. Only 5% of those funds have actually got into crypto. Obviously, a lot of the hedge funds and obviously the big guys, BlackRock, Fidelity, Vanguard, obviously have. But there are hundreds and hundreds of fund managers that manage tens, if not hundreds of billions of dollars that are looking to get into crypto that have not done so yet. So again, this wave of institutional money hasn't even started. So again, I can't. And there's people out there calling for Bitcoin to 10K, which, I mean, if it goes to 10K, great, I'll buy a shitload of it. But sadly, I don't think it's going to go there.
That's absolutely brilliant insight. So was there anything else you wanted to cover?
So I guess look, the only other thing that I really wanted to talk about was effectively kind of where we are in terms of the equity markets. Now, I keep seeing all these reports that this is the beginning of the end. This is it. If you look at the charts, yes, the NASDAQ is down, but it's only about 16.5% off the highs. Well, that's not a huge amount. That's hardly in bear market territory. Likewise, if you look at the S&P, I think it's about 11%. So I think, again, you've got to put some of this rhetoric into context. I really think you have to think long and hard about where we are in this phase of the cycle. One of the really interesting things that as we kind of discussed before, we needed a bit of an excuse for central banks to stop the rhetoric of we're going to hike rates, we're going to cut tapering. Well, the Russian issue is a great excuse for central banks to not hike and to not taper. So I'm wondering whether maybe this is actually a really, really interesting blessing in disguise. Perhaps what happens over the next week or two is the Fed come out and say, hey, we were going to hike if it hadn't been for those pesky kids in Russia, a bit like Scooby-Doo. We've got no choice. What are you going to do? Likewise, Bank of England, ECB. I really think that there's a very strong probability this could happen. And I'm looking at the equity markets to gauge what that point of inflection is. I don't think we're there yet. Maybe the end of the week, maybe the end of next week, I'm not sure. But if they do, then my God, that's incredibly bullish for March and April for crypto.
That's absolutely brilliant. That really does bear out what I've been looking at in the charts, but especially the commodity markets. If you remember a while back, we were talking about commodity prices going higher and how that would be a major factor going forward, and they've just accelerated. So we'll have a look at some of those charts because they are very interesting. But in the weekly that we've just put out, I mean, things were moving really fast, and today is actually a really important day given that they announced it today. But I wanted to start off with the S&P. Now, we talked about a correction here. We talked about this many times, and as you can see, the market was topping out way before this announcement and has actually come down aggressively, but then we're getting a bullish candle here. So this is a potential spike reversal. And if we look at the NASDAQ, which was leading the way down, and I put this in the weekly, that it was actually last week that this target was at 12,960. You can see we got really close to this important Fibonacci level, the first Fibonacci retracement. And again, the market has turned right around. The 200-day moving average is still rising. Okay, the 60-day moving average is turning down. So that's reflecting this trend. But what you're saying is absolutely right, because we are in a big correction. And yes, it could go further. But let's take a step back and say, well, what's the news flow? The news flow is we've known about this for a while. We've seen this happen before where there's an announcement of war. Anyone who remembers the Gulf War, when the tanks rolled in, oil prices shot up, and then they completely turned around and collapsed. So all this fear that's in the market at the moment could unwind very quickly. Again, in the weekly, we talked about gold moving up a couple of weeks ago, and we saw a breakout from this triangular constriction to the upside. And my view was we'd have one more move in the dollar, which we're going to have a look at in a moment, and then we'd move into this big bullish trend. But interestingly, I was saying in the weekly, while this was much higher, and of course because of the volatility, things are moving very fast, the market's come off. So we've got a lot of selling pressure here, and this is going to look like a spike. So now the risk is that this goes back down again, and the dollar continues on its way higher. So I am bullish on gold. I am bullish on silver. So I'm not changing any of those long-term views. It was just what sparked the rally. Now, the reason why I'm saying all of this, because the market has a phrase of buy the rumor, sell the fact, or sell the rumor, buy the fact. And when it's just a little bit too neat, when it's too obvious, it's obviously wrong, as the phrase goes. And so you have to be careful that when you're sort of panicking into a trade, whether you're actually like at the end of something rather than the beginning of something. So, who knows? We've got to see how this market trades. And obviously the twists and turns of the war are important. But that's what you've said earlier is really interesting insight, really good insight that you think this will be over relatively quickly. Because if that's right, someone else out there or the market's thinking that already, is already reacting like that. So over to actually, before we get to the Bitcoin chart, I'm going to have a look at the 10-year yields, which hit our targets consolidating around the highs. Now, I would have thought, and I totally agree with you, that the Fed are going to be backing away next month from their potential 50 basis point hike to a 25, and then the whole curve will change because of these commodity prices. They're in a real sticky situation because you're going to have rising inflation and potentially a bit of a pullback in the economy, and they're not going to be able to raise rates quickly enough, which should mean the long end goes down, i.e. yields go up. And like you say, I see that as a positive for crypto. Potentially positive for the dollar. I mean, look at, actually, this has even gone up since I wrote the weekly when this was just slightly breaking higher here. And it's the dollar index has just shot higher towards our very long-term target, for those of you who've been following it, at this the sort of 97.72 level. So this is a Fibonacci retracement. Now, if it takes that out, we could be going all the way to 100. Now, I'm not saying that yet because the markets are quite volatile, but this bull dollar move is something we've had on the cards since all the way back in July, since that breakout here, and it's not ended yet. It wobbled a little bit and consolidated in a strange way, but this breakout is definitely impulsive. So, it's keeping the picture of a bullish dollar move, a kind of risk off in certain markets move. But I don't know, I think it's a brave call to jump into the crypto market right now. But I have a lot of sympathy for the view because I don't like the fact that the market is panicked into it, or panicked out of this, I should say. There's a lot of bearish sentiment. It has bounced today off a Fibonacci retracement level, which I liked. It's this level here, which is actually the 50% from a major low to the high, but because the low was very low, it's almost like 50% off the high, if that makes sense. But basically, it comes in around 34,296. And so that's a decent bounce. It actually reflects what's happened in oil. So that could potentially be turning around. Now, if we can hold over this low, for the next week or two, I think that would be a good sign, a good initial sign. If it breaks it, okay, we're going to be heading down to 28,500. But still, unless that's the last line in the sand. If that breaks, then, okay, we've got a problem. This is a major top. But this falls into the category of it looking a little bit too neat that the market is selling off aggressively on this news, having already fallen. And I think if there's going to be sanctions and if there's going to be, all this pressure put on Russia, I think that just increases the appeal of decentralized assets. And I think people are going to cotton on to that very, very soon once they've realized that taking the risk off position and then looking at the big picture uses of these assets, they're going to say, actually, these could be very good levels. So we've already had the spike down. We've already had the major panic. So this is a secondary move. On the way up, I thought we might have got a little pullback, just like this sort of fear. Now, it's been exaggerated by the news that's happened. I didn't expect it to come back this far. I thought it would be a smaller consolidation. So it's definitely come much further than I expected. With Ethereum, there was major resistance we highlighted, this 33.23 level. So that was a big level on the way down. And in Bitcoin, until we're clear of 54,000, we have to play it very carefully. But again, if we can make a higher low here, this would be amazing. It'd be great. So we're at the first stages of that, and there's a long way to go. But the market's starting to turn around today. It's bouncing off some interesting levels, so we shall see. So, I think you've got to be cautious regardless because the volatility is very high. But I really totally agree with what you're saying there, and I think it's also very interesting what you're saying about the about the potential for higher agricultural products, because this has been going on for a while. Technically, corn futures are heading towards its well, what's high that's the high from 2021, which you would say that there were a lot of supply side issues and lots of problems that would have caused that move. We had a correction, but look how it's rallying all the way back into it. Now, if we go and have a look at a weekly chart, you'll be able to see that this is actually not going into major highs. That it has been higher than this back in February 2020. So there's a lot of resistance coming up, but the power of this move, I wouldn't put it past the market to take it out and go much higher. Certainly wouldn't stand in the way of it at this point. Wheat is the same. It's been in an upward trend for a while. It's just continuing that upward trend. Soy futures the same. These are not new moves. The markets have been, on a tear already, and it's just following the market up. Now, if we go to the that soybean oil, so soybean oil has already taken its prior high out. So now they're not all completely bullish. Rice futures are. So rice futures has taken out a really nice triangle. That's a great technical pattern. And it's actually quite understated if you look at what's been going on. That's got a lot of potential to accelerate. But funnily enough, cocoa is back in its range. So not all markets are breaking out. For some reason, cocoa and cocoa's in a range, but coffee, is still going up. So what you're saying about higher commodity prices, I think is absolutely on the money. And I think it's going to cause some real policy headaches. But I totally agree. The Fed have erred on the side of caution and always not raised rates, and they're probably going to do the same. So I think that's going to be a real boost for anything that can protect you against inflation. And that's anything that's not the dollar. So we've got to wait for the March announcement to see what they actually do. But I think after the March announcement, the run in the dollar may be over, and it could be off to the races for gold, silver, and all the other commodities.
Yeah, I agree. I think so. I think that's probably how this is going to unfold in terms of scenario. The other thing I neglected to mention beforehand, but probably worth mentioning now as well, is some of the slightly insane moves made by the Trudeau administration in Canada. You have a bunch of people protesting peacefully, and if you look at the mainstream narrative, they're all right-wing redneck racists. But if you actually listen to the rhetoric or listen to what they're saying, they're just honest, salt-the-earth people that want their freedom back.
Of course.
And what I think is insane about this is that he's implemented, and it's quite funny. I read the headline on CNN. I love reading CNN headlines because they're normally just made up. It said he has put into place a rarely used piece of legislation. I looked this up. This has never been used in the history of Canada. So yes, rarely, as in never before used. So he's basically imposing, he's basically classifying them as terrorists and freezing their assets.
It's terrible.
Now, last time I checked, I thought in a democracy you were able to peacefully protest. That's exactly what they're doing. So it's kind of interesting, and also the fact that they suspended and froze the GoFundMe donations that were given to support the truckers, and made it illegal for people to supply them with food or fuel.
Yeah.
So I see all these people on social media saying, "Oh, I stand with the people of Ukraine." Well, I stand with the people of Canada. All these morons commenting on Ukraine don't understand the history of the country, and I basically just copying and pasting from the mainstream narrative. But in terms of where is the outrage? Where are the comments from our political leaders in the UK or the United States for the way that the Trudeau government administration is treating its own people?
Yes,
that's a bigger issue, I think. And if anything is going to wake people up to the benefits of decentralization in crypto, I think it is going to be those kind of actions. So I think this is, look, it's not a good thing whenever you have tyranny from allegedly free governments, but I think the net impact of this will be positive for crypto.
That's really interesting, Manu, because I'd heard that they had suspended the Bitcoin payments, so that must have been a conflation, because I'm not sure that they could do that, and I thought that was a bit strange. But if it was a GoFundMe page, then that's something else. They obviously could do that.
Yeah, they seized, I think it was $1.7 or $1.8 million on a GoFundMe a campaign page. They've suspended about half a dozen bank accounts as well.
Yeah,
which they can do. But yeah, good luck stopping peer-to-peer crypto payments.
Absolutely. Brilliant. Well, thank you, Manu, for your insight. That's very interesting times, as they say. And thank you so much for watching, and we will catch you next time.